Hello, my name is Rachel and welcome back to my channel. So in today's video, we are going to cover why fees are so important when you are investing. They are such a powerful predictor to your overall long-term returns because they do compound over time. So a senior financial advisor at Vanguard actually said, costs are simply a return that needs to be overcome to break even. So as you probably already know, compound interest is such a powerful tool in growing your wealth, but expensive or high fees can really hamper that growth. So I'm going to share with you a really interesting chart later on, which shows the growth of £100,000 over 20 years with different fee structures. First of all, I want to share some examples of where I have personally gone about cutting the fees that I am paying for my investments. So the first one is that I actually moved my self-invested personal pension on to a different provider. I actually did a review video on the different SIPP providers that I went through, and I actually ended up going with the cheapest one for me, for my portfolio and for my pot size of money. So I was actually being charged a hidden admin fee from my previous provider, which was really racking up the costs of my investments. Now, I also did another video where I compared stocks and shares ISA fees and made sure that I was getting the right deal for me and that the fees were right for me. So I'm just going to link that video here if you want to check it out. So another way that I've really been taking advantage of low cost fees is by investing in more ETFs. So my portfolio was very heavy on actively managed funds, but if I can find an ETF, which is an exchange traded fund or an index fund that does a very similar job to some of the other funds that I was invested in, and the fees are much lower, then I would much rather hold that investment. So an example of this is I was invested in an actively managed tech fund which had fees of just over 1%. I made the decision that actually I wanted to invest in an ETF that covered tech funds instead. So I chose the IITU ETF, which is the iShares S&P 500 Information Technology Sector ETF, and the fees for this are just 0.15%. Their holdings were very similar, but the fees were much cheaper for the ETF. So at the moment, investing might feel quite stressful, and there are a lot of things that are out of your control. For example, inflation hitting a 40-year high, but fees and ongoing charges for your investments is something that you can very much take hold of and take control of. As I said, I changed the provider that I was using for my self-invested personal pension, or SIPP. Yes, this was a lot of effort, but when we look at the returns over time that hopefully I should see by not paying those expensive admin fees and by keeping my costs really low, I can save probably tens of thousands of pounds before I take my pension out. So although it's a faff, it's definitely one that's worthwhile. So let me get onto this chart that was featured in the Investors Chronicle article. So I read the Investors Chronicle quite regularly. I find it really interesting, but this chart really illustrates the importance of lowering those fees as soon as you possibly can, because those fees really do compound over time. So I'm going to put the chart up on the screen for you now. So this chart shows the performance of an initial investment of £100,000 with returns based on the performance of the MSCI World Index over the last 2 decades, over the last 20 years. So the red line is showing you how much money you would make if your annual costs were 0.3%, which is the kind of fees that you would probably see with a platform like Vanguard, because they have very low fees and their funds are very cheap as well. That's probably the lowest investing fees you're going to see. Then the dark blue line is your annual costs, were they 1.3%? And then the final light green line shows your returns if your annual costs were set at 2.3%. 0.3%. So in this example, £100,000 invested in global equities 2 decades ago would be worth £275,640 today if you put this into an investment with an annual cost of 0.3%. So for costs of 1.3%, the return falls to £225,310. So that is a total reduction of 18%, and you have lost out there on £50,000 just by having fees of 1.3%, so just 1% higher than those 0.3% fees. So moving on to the last and final example, which is the light green line. So if £100,000 was invested in a fund with costs of 2.3%, the total return would be a third lower than for one with costs of 0.3%. So all of these examples start out with a pot of £100,000, and you can see that over 20 years, those fees are really eating away at the final amount that you are going to be left with, whether that be for retirement or to help your children with buying a house, whatever it's for. That is a huge difference based on the fees. So as I said, I took action on this and have made some changes to the different investment portfolios that I have based on the fees. So changing to different platform providers, as well as selecting funds with lower fees more recently as well. So the fees that you should be looking out for are your platform fees, your ongoing charges, any annual management charges as well. And then, as I said, it's also worth looking in the small print to just see if there's any hidden kind of admin charges or anything like that. As I said, I was paying a hidden admin charge for my self-invested personal pension, which is why I chose to move it across to a different platform. So I will link my SIPP comparison here, which compares all the different fees of the different SIPP providers that I looked at. And then I'll also link my stocks and shares investment ISA comparison for different platforms, just so you can have a look at those fees as well. I also talk about the customer service that I've experienced with these different companies in these videos as well. But if you want to have a basic look at the fee structure, then you can check that out. It's also really important to look at the fees with a fine-tooth comb for yourself and for the value of money that you are investing. Also, fees do change over time, so please do make sure that you're looking at the most current fees before you decide to open up a stocks and shares ISA or an investment ISA with a specific platform. It's also worth noting that more recently in the market, particularly in app-based investing, that it might look as if there are some platforms that have completely commission-free investing, but I've found that investing is never really free entirely, and that there will be some costs associated with that. So many platforms offer commission-free trading, but even if you aren't paying commission to your broker, there is a bid-offer spread when you buy or sell listed securities. So it's most likely that in some format you will be paying fees. So really look at them with a fine-tooth comb and check that you are choosing the investment and the platform that's right for you. Investing I found to be really interesting, and as I said, with the market a little bit all over the place at the moment, it is nice to be able to have control over something, and fees is certainly something that over time is worth taking control of, because it can make such a huge difference to the investment pot that you are left with. I mean, we're talking tens of thousands of pounds in the examples I've shared with you today. So thanks so much for watching, and I wish you all the best with your investments. Bye bye.